One of the most expensive office markets on earth is currently being sold at 70% discount. In San Francisco, billion-dollar towers are becoming ghost towns. And what's happening here isn't just a dip, it's a full on financial execution. Behind those glass walls, the numbers have stopped adding up, and the world's tech capital is facing the highest vacancy rates in its history. At its peak, a San Francisco office address was the ultimate status symbol. Tech giants were expanding faster than they could hire. Landlords had all the leverage, and investors were pouring billions into towers based on record high valuations. But then the world changed. Remote work didn't just disrupt the market, it broke it. When the tech sector realized it didn't need these massive footprints, the exodus began. Companies started subleasing, downsizing, and walking away. Suddenly, the demand that fueled those billion-dollar valuations just vanished. Here's where it gets serious. Most of these buildings aren't owned outright. They're tied to massive mortgages based on those inflated pre 2020 prices. When the rental income disappears, the math fails. We're now seeing trophy buildings sell for 50 to 70% less than they were worth. We're now seeing trophy buildings sell for 50 to 70% less than they were worth just a few years ago. Let that sink in. $300 million assets are being offloaded for $60 million. This is repricing at scale. It's hitting the older, outdated towers hardest. If companies are going to bring people back at all, they want grade A luxury amenities, not dusty cubicles in a 40-year-old building. This has created a brutal split. The top tier is surviving, but everything else is struggling to stay relevant. And make no mistake, this isn't just a San Francisco problem. This city is the canary in the coal mine. Chicago, New York, LA, and Dallas are all watching closely because they're facing the same ingredients: massive supply, changing habits, and billions in debt tied to old assumptions. What happens to these zombie towers? Can they really be converted to apartments, or are they destined to sit empty for decades? If you were a developer, would you be buying these 70% off deals right now, or is the risk too high? Let me know your thoughts in the comments, and I'm reading all of them. What are your thoughts?